Hello everyone, welcome to EliteWaveTestFocus.com YouTube channel. This is Henry and today is Thursday, March the 3rd and the time is around 2:30 a.m. GMT. And for today, we're going to be updating the chart of the S&P SPX. This is a cash index 60 minutes chart. We can see right here that we ended with X, so it is in the form of a WXY, and we are now within the Y leg on the downside, and within the Y leg it subdivides into another WXY structure right here. This W is in another WXY. So there's a lot of 7 swing, right? This is 1 2 3 ABC, another ABC, 3 swing here, 3 swing here. It's a 7 swing ending W, 3 swings up, and then expected to go lower again as long as we stay below 45.95. So the current rally, the C leg, assuming the C leg can reach 100% extension on the A leg, it can potentially almost retest the previous peak here. You can measure the 100% extension, potentially can go all the way up to 45.15, right? And so this is pretty close to this invalidation level, which makes it a little bit interesting outlook right now, a little bit tricky. Okay, now sometimes the C leg, as you know, doesn't necessarily have to reach 100%. I mean, it is higher probability that it extends all the way up to 100%, but it is not always. Nothing is always going to be 100% in the market, right? If it truncates, then basically the idea still remains the same. Truncates mean it doesn't reach 45.15 and turns lower before reaching 45.15. If it truncates, then most likely then it is going to truncate when it finishes this with 1, because when you finish this one here, 1 of C, you will have a 5 ways up from the P, and that could be your entire C instead of 1 of C. But the idea still remains the same. Even if we got truncation, the idea still is going to be that as long as we don't break above 45.95, we could see more downside, right? So that's the idea of the S&P. Like I said, it's a little bit tricky, and I will try to explain all the possibilities so that you guys are aware. Now, of course, if you don't understand Elite Wave at all, what I'm about to explain to you will make no sense, and you won't find anything that you can get out of it, and maybe you will get confused. But if you understand Elite Wave, you will be able to understand what what I'm about to explain. Okay, so let's take a look first of all in the higher time frame. I'm gonna be looking at the daily chart, and notice here I'm gonna put this X here on the daily time frame. So if I go zooming out on the daily, this is your X, which is the same X as this one in the 1 hour time frame. So if this is the X, that means this is the W, right? So then if this is the WX, so we're talking about this pullback that started from January the 4th, right? So that's what we are talking about. So if you take a look at that pullback from the January the 4th, now everybody can understand this. This is very simple. This is a lower low. It is a lower low. Now when you have a lower low like this, typically, ideally, you want to see the third swing on the Y leg in this case is going to reach the 100%. So if you just simply measure the extension, you have a potential target towards 4,000 here. So that remains to be the potential target from here. So you get what it looks to be like a 3 swing here, right? Ended here, and this rally looks to be a different cycle than this. It's too big to be like, for example, if you want to call it 1 2 3 4 5, it looks too big to be with 4. Also breaking the trend line as well. If you look at the larger the lower time frame, let's say, let me go down to the 4-hour time frame here, you will see better how it breaks. Now you notice here it breaks the trend line in the RA, and the momentum also breaks. So that looks to me is less likely to be with 4 than a connector. So this looks to me the cycle finish, and this is a new cycle. And since we break below this one again, so I think the better labeling at this stage will be WX instead of 1 2 3 4. Okay, So that's basically the logic behind the labeling. Okay. Now, so again, we do have what looks to be incomplete sequence, right? WX and then the Y can potentially go to 4,000 approximately. And now in the shorter cycle, we also have what looks to be a higher high here from this February 24, and that third swing here has not reached 100% of the first swing, this E leg. So that's why I think in the very short term we might potentially see another leg up, but as long as we stay below 45.95, again, as long as we stay below here, because the structure, the sequence from the January 4 looks incomplete, this rally can still fail and go down again. Now, you also want to pay attention as well to this trend line here. Right? Sometimes this trend line, it can also provide resistance. So let's say if it continues to rally without reaching 100%, it might, already finish here at the trend line, starting to turn lower again. So that's the idea. Now, a couple of other things, but possibilities you need to take into account is the idea that we got a divergence here on your fifth swing. Right? On your fifth swing, you have a divergence. So what that means is that because of that divergence, it is actually more likely to extend lower. Now, in a WXY, in the fifth swing, should have a divergence, and then in the seventh swing, when it finished the WXY, it should erase the divergence, right? I mean, if you are our member, you understand the concept. So the idea, we have a divergence on the fifth swing from the peak 1, 2, 3, 4, 5, suggests we are likely actually extending to the downside. Now, the other possibility here is the idea that we could be doing a flat from here, either in the form of an expanded flat or a running flat. Now, a flat definitely is something you should consider as a possibility, because we see evidence in other instruments that is correlated to the indices, especially in the Forex group, that they are doing a flat. For example, pairs like the Aussie dollars right now rallying, and if they can continue to rally, you cannot rule out the possibility this is doing a flat. A flat will simply means that you have an AB here, and instead of just ABC here, this can turns out to be 1, 2, 3, 4, 5. Right? It could be doing 1, 2, 3, 4, 5 before turning lower again. So that will be another possibility there from the S&P. In case this pivot, this X here, is not holding. Okay, so I know there's a lot of possibilities, I know, but I have to still explain it to you guys what the possibilities are. And the idea though, still, because it looks to have a 5 swing down with a divergence at the lows, the idea still is, number one, okay, the primary view. Going back to the primary view, as long as we stay below X, we are calling for another leg down. If the X breaks, then this is doing a flat, this is doing a flat, and after that going down, right? So the January 4 high remains to be in the key level in this case, and there are two possible ways here. X holds, which is the primary view, we go down, or X breaks, we do a flat before going down. Both of them still calling for another leg down below this January 4 high. Okay, so I hope that is clear. And in the shorter cycle, like I said, it can see more upside, a little bit more to finish the C leg, and this X is going to be in the current primary view. As long as below here we can see more downside. Break above here, doing a flat. This is A, this is B, and this is 1, 2, 3, 4, 5, finishing X like this before going down. Alright, so that's the update here, guys. As always, if you want to get further updates, regular updates on the indices, Forex, cryptos, feel free to try our service. We have 14 days trial, and the link is provided in the description of the video. So I'll see you all again next time. Have a nice day, everyone.